Great to be back. It's Friday. We're going to take as many calls as we can. I hope to hear from you. 888-589-8840. You can queue up your call anytime. We're going to get to the calls next segment. 888-589-8840. It's Rapid Fire Friday, where we sometimes do rapid fire. Usually when we don't do rapid fire, it's my fault because somebody brings up something or asks a question that I feel a need to elaborate on. And every week I say I'm going to try to not do that. I haven't been very good at that. Anyway, we got a couple things that I do want to talk about. Of course, yesterday the markets finished up in positive territory. The Dow finished up 80 points. The S&P was up 11 points. So that was good. Gold seems to be ticking up. Oil is ticking up. Most major commodities were up. Right now, the stock futures seem to be relatively flat. One of the things that is going to start to happen today is financial data. We're going to start seeing financial firms reporting earnings. So that's going to start today with Wells Fargo. So probably a little bit of a wait and see kind of attitude for all of that. Indexes, the S&P index anyway, is at a 5-year high as of yesterday. At a 5-year high. So the S&P index closed. It is at 1472. 1472, that is a 5-year high for the index. So off to a great start for the year. I'm going to stick by my predictions. I believe that the market is going to end up at the end of the year relatively flat to slightly positive. I don't think we're going to have as good a year as we did last year. The reason for that is primarily, obviously, doing nothing about the fiscal cliff, continuing to see debt increase as our spending continues to be on the rise and doing nothing about it, creating more uncertainty about the future of America's economy. I think we're going to see uncertainty in and around regulation and tax rules. It is becoming more and more evident that we've got an administration whose ideology or economic ideology is based on sharing wealth, no concern for people's 401ks or IRAs and the loss of purchasing power in all of that. No real concerns about inflation, no real concerns about tax increases. Now, we cannot continue to share the wealth with the top 1%. There are not enough millionaires to have enough wealth and to be taxed enough to go around. It is going to continue to affect middle class, all classes of the economy. Today, there was a little bit of a reality of that today when a number of people, the majority of people around the country who are working will receive their paychecks and notice that their paycheck is a little bit less than it was, not counting any increases, cost of living increases they may have received from their employers, that they're going to see paychecks that have shrunk a bit compared to last year. That is due to not a tax increase, by the way, and let's not call it that. It isn't. It is a return to what was normal in our Social Security rate that we are receiving. So, Adam, I'm watching the board lit up and then calls dropping. I don't know what. I hope there's nothing wrong with the phones. But anyway, I don't know that we can call it a tax increase, but nevertheless, what it's doing is taking money out of consumers' pockets, and that is not a good thing. So what I'm very interested in the end of January to see what consumer confidence has done for the end of January and where that might be. So, we'll have to wait and see. The Commerce Department says that the deficit has widened 15.8% to $48.7 billion in November from October U.S. exports. And I talked a little bit about this yesterday as far as exports, but U.S. exports increased 1%. Well, yes, they increased 1%, but here's the deal. Imports increased 3.8%. The increase in imports, 3.8%, would be indicated and would stand to reason when we look at what happened to China yesterday when I was talking about the trade exporting of China increasing 14.6%. Well, it had to go somewhere, and it went in their two largest markets, which is the United States of America and the Eurozone. Eurozone being number one, United States of America being number two. So, of course, it would only stand to reason that imports obviously grew. Now, when I see imports in the United States of America growing, it tells me two things. One, there is a demand for goods and services in general, not necessarily goods and services coming out of foreign countries, but nevertheless, goods and services here in America. That would indicate that consumers are spending more money, and I guess that is somewhat good news for the economy. It's not necessarily good news for American manufacturers, but nevertheless, good news in the sense that people are spending money. But what do you do when they have less money to spend? So, for instance, we're seeing oil staying around $95 a barrel. That is going to lead to higher gas prices at some point in time. I don't think we're going to see them through the winter unless we all of a sudden have an incredibly harsh second half, weather-wise, second half of the winter, where we're starting to see some oil prices really go up, or less there continues to be, or a broadening of the unrest that we could possibly see in the Middle East. So we'll have to watch that. But the fact of the matter is, the wider the trade deficit, the greater the drag is on U.S. growth. Now, the last thing the United States needs is a drag on U.S. growth. Now, I will reiterate what I've been saying. We don't have growth in America. I don't believe we've had growth in America. I don't think we've had growth in America since 2007. Real growth. The fact of the matter is, 2% growth is not growth. 2% growth is better than negative, but it's not growth. Unless this president continues to do something about population growth, which he's done, which he seems to be bent on doing something about. He wants to see, in my opinion, the murder of more and more babies. He's accomplishing that, at least with Planned Parenthood and others. And I think we're going to see the care he's accomplishing with Obamacare. We're going to start to see the care of the elderly decrease. So he's going to accomplish that, and thereby the population growth. A very alarming statistic to me. It's not it's not meant to sound comical in any way, shape, or form, because it isn't. It's a very disturbing statistic. But the fact of the matter is, in Japan, the sales of adult diapers are actually higher than the sale of infant diapers. That is sad. And I guess the question, I mean, they had to see it coming, right? They had to have seen it coming. Is that where we are headed? I think with Obamacare, we may be headed where we start to see the average life expectancy coming down as a result of lack of care. Now, that sounds like a harsh statement and a dramatic statement, but I think that it is likely to be true. Topple, that with abortion rates continuing to increase, then maybe 2% GDP growth ends up being a pretty good number. Because right now, so let's just say you think we have a great economy right now. Or let's just say you think we have a crummy economy. Then you need more than 2% to take this great economy, if that's what you think we have, to make it more prosperous and greater. You need more than 2%. Because 2% keeps pace. If it's a crummy economy, 2% will allow us to maintain our crummy economy. 2.4% allows us to keep pace with population. But here's what changes that old normal of 2.4%. That would be workforce participants. So when we see the labor force participation rate decreasing, as we have seen, then I guess that skews or changes the new normal. And maybe that new normal is what everybody is considering our new Y 2% is good. I'm not in that camp. How about Nissan? Yesterday, I talked about Nissan opening up a battery plant and start production of their batteries for their electric cars, and also start production in Tennessee. This is both in Tennessee, to start production of their electric car. Can't think of the name of it, but their electric car in Tennessee. Also, Nissan, coming out today, is announcing that it will move the production of its sport utility vehicle, the Murano, from Japan to the U.S. as it seeks to reduce cost by building where demand is. That's what companies like Apple will be doing. As Apple said today, they believe their biggest market in the next 5 years is going to be China. So Japan now will be moving the production of their next generation Murano SUV to Cantor plant in Mississippi. Where's Cantor, Mississippi? I guess that's, Adam's not listening. Anyway, I guess that's south of here. I'm not sure. But that's going to start in 2014. So that is, so the U.S. manufacturers, car manufacturers, aren't doing it, but it looks like Nissan is doing it. And that's good news for America. That's good news for jobs. Jobs in Mississippi, jobs in Tennessee, that Nissan is obviously helping out in that regard. So I think that's good news. Good to see some good news. European stocks waver. Hey, listen, news came out this morning that that Britain could be headed into a recession. I see the note, Cantor, Mississippi, somewhere near Jackson. Okay, I didn't know whether that was local because there's the Toyota plant, which is not running at full capacity yet, right, Adam? Yeah. So you've got that. We've got a Toyota plant here in Mississippi, right near the AFR home of Tupelo, outside of Tupelo. So, thankfully, the Japanese car manufacturers are helping our unemployment rate. So that's a couple things on the good news front that are happening. That's going to certainly be good for Mississippi. When you just think of two different areas of Mississippi, now one looking at the Murano, the Nissan plant moving operations to Cantor, Mississippi, and Toyota here outside of Tupelo, Mississippi. You've got Tennessee with BMW plants and plants from Toyota, and I think Subaru has a plant, if I'm not mistaken, in Tennessee as well. So good stuff going on in the auto industry and the auto sector coming here to help America and create some jobs. So that's good news. Is it going to turn the economy around? No.